Welcome to PNK Stocks YouTube channel. Last video we saw two candlestick formation, how the candles will form. If you didn't see the video, here are the videos. Single candlestick formation video is this one, and we saw the examples on the chart as well. This is the video, and we again gone through the two candlestick formation video here. And today we will go through the two candlestick formation, how those things form on the chart, live chart. Before that, the two candlestick formation that what we are seeing, just tune your eyes. If you see this kind of a thing, it's a bullish engulfing and price will go up. Bearish engulfing, price will come down. This is the piercing pattern where market will go up. This is dark cloud cover, market will fall down. Bullish harami and bearish harami. This is called a pregnant lady in Japanese language. This is a bullish harami, price will go up. This is a bearish harami, price will come down. These are the tweezer top and tweezer bottom. These things are rarely occur on the charts, and it's tough to identify, but still we'll see whether we can spot any of the tweezer top, tweezer bottom thing in the live chart. Please, if you didn't go through the single candlestick formation, go through this video and with examples. Two candlestick formation here, and now we are going with the two candlestick formation with the live examples. If you are very new to the channel, please go through all the videos from beginning. It's very helpful for you. I am giving financial knowledge from almost zero to very advanced level in future. So better go through all the videos if you are new to the channel, and if you are a regular member, then you can go through the this video onwards. Let's see the examples. Now we'll divide our today's video into three parts. One is on daily chart. This is for swing trading, at least for 1 month to 3 months or 6 months duration. You can plan for swing trade on daily chart. If you take it on hourly chart, then it could be 2 days to 1 week. If you take 15 minutes chart, then it's a intraday trade. Let us start on the daily chart. Hope you remember in the last video as well, we plotted two indicators in our TradingView platform. Hope you are aware, TradingView platform is a free for all with a limited access, and if you are become a pro, then you can take the paid access, and I don't think paid access required. I'm into the market last 15 years and I'm still using free access, where if you are hands-on experience in TradingView, then for free access they'll give only 3 indicators to plot, but with the 3 indicators itself you can plot multiple indicators, as lot of techie people built a single indicator which will have a multiple indicators in that. So let us start now. This is the Nifty future chart, and we'll start seeing two candlestick formation and one candlestick formation. See here, this is bullish engulfing. This is the red candle, and green candle entirely occupied on it. If you see only single candlestick formation, you can consider this as a Marubozu as well. The main important thing, this is the support. In the support area, this bullish engulfing formation happened. So what happens when bullish engulfing happens? Market will go up. Till which point it will go up? Till it reaches the resistance level. In future we'll be studying how to draw support and resistance lines, and lot of indicators are there to plot, so automatically we will get that as well. Now see here, we get almost 1:3 kind of a risk to reward in this. So this you can call it bullish engulfing, or else a single candlestick way it's a Marubozu candle. The aggressive trader will enter market when this candle closes. A conservative person can enter, at least market will all the time will retrace back, so you may enter 50% of the engulfing. The risk part here is that if you place the order after forming the bullish engulfing, if you place the order 50% below, 50% chances that you may get entry, 50% market might go from there itself. So think whether you are a conservative investor or an aggressive investor. If you are aggressive investor, then you need to place entry on the top of the green color candle, the bullish engulfing top. Market will go up, it will go on till this resistance level, from there it fallen. Again there is a bullish engulfing. See here, risk to reward 1:4 kind of a risk to reward we have. A red candle followed by a green candle completely occupied. Red candle and followed by a green candle completely occupied in it, and this is the bullish engulfing, and we place the entry order on top of it, and market gone up even beyond our resistance level. A conservative trader placed the order 50% of the engulfed candle, still we got an entry. If you get in this way, then you will be getting 1:5 or even better risk to reward. Some of our friends are asking how to work on trading view, so probably in next video we'll even go through how to start opening on trading view platform, and which are the things that we have to use them to have our hands on. We'll see. Now in support and resistance we'll see something like the resistance part. If price breaks the resistance, this resistance will become support. Now see, if price is above to the resistance, then the resistance will become support, and taken support here, market moved up. So now we'll see here again candlestick formation. See here, another bullish engulfing kind of a pattern formed at the support. Earlier it was a resistance, now it becomes support. Market moved up till here, and we got 1:7.25 kind of a risk to reward here. And in this, if you put entry 50% of the engulfed candidate, you didn't get an entry, where you lost this rate. But as an aggressive trader, if you place entry on the top of it, market moved up. So now what I'll do, I'll be 50% aggressive, 50% conservative trader. If I want to buy 100 quantity, then I'll place 50 on the aggressive note, another 50 when market comes back, then I'll place 50% at the middle of the engulfed candle, where if I even miss out, then probably my I have already entered 50 quantity. And main thing now, here risk to reward shows 1.27. What good practice is, when market gives 2 times 1:2, exit 25% of your quantity. When market moves another 2 times 1:4 or 1:5, exit another 25%. And then finally what you do, trail your SL. Trail SL means when market moved up, bring your SL to here. When market moved up till here, bring your SL here. When market moved up to here, bring your SL to here. When market moved till here, bring your SL to here. Then finally your SL hit here, and you got 1:2 almost 6 kind of a risk to reward here. This is a good practice. Now novice investors, what they do, they exit very quickly on profit, but they hold the losing trades. My strong suggestion, put your SL in the system when you take an entry. Let us hit the SL 10 times or 20 times. That is the best practice. Without SL means you are losing entire your capital very soon. So best practice, put your SL once you enter into the trade. And when market moved up at least 1:2, then trail your SL to the below of the pivot. This is called pivot, or else you can tell retraced area. This is another retraced area. If you trail in this way, at least you will be having this kind of a risk to reward, and you are not losing your money. Let us erase this. Can you identify now which is this formation? This is bearish engulfing formation. And where we need to take entry in the bearish engulfing thing, when bearish engulfing forms, you need to enter. When bearish engulfing forms, you need to enter at the resistance. If there is a resistance and you identified bearish engulfing, you can enter the trade at the below of the red candle, and you have 1:2 kind of a risk to reward. If you want to put your 50% at the aggressive mode, 50% at the conservative mode, still you have an entry. In that case, you will be having even more risk to reward. Now see what is happening here. Resistance, price is trying to break the resistance, but bears are again acting. So in this area we should not enter any trade. We should have price moved out of the either support or resistance. This is something, area making consolidation. So if you enter somewhere here thinking if you have any candlestick formation, better you need to exit when you get again your price. We will be getting trapped in this kind of an area. See, price moved till here and all of a sudden moved up, and we don't have any candlestick formation. Better leave it. We have 4,000 stocks in the market, so at least you can have 10 stocks daily with you, and before trading you can analyze charts. Can you identify this pattern? Bearish engulfing. Are we going to take a trade in the bearish engulfing here? No. We need to take the trade when bearish engulfing forms at the resistance. Here bearish engulfing formed at the support. So we should not take the trade. But at the support, price breaks on previous candle, we can get entry. But that you should do only when you are 2 years experience and you have very hands-on experience on the support and resistance. Can you identify this one? This is neither a two candlestick formation or a single candlestick formation. This is called doji candle. Doji candle is indecision candle. It's not able to go up or below. That's the reason doji candle will form. Doji candle means small body and both sides wicks more than the body size. The better trade is that if doji forms, you can place the order either sides, but if doji forms at the resistance, take the entry at the low, breaks. If doji forms at the bottom, take the trade on the top of it. Here we have an entry at the bottom and we can take a trade here. And we can write whatever the thing you want. This is given 1:3.9 risk to reward ratio. But what happened? Price again moved to the resistance, again come back, again gone to the resistance, again come back. So here when you take an entry, then trail your stop loss. So when price moves down, bring your stop loss here. When price breaks the candle low by next candle, bring your SL here. When price again breaks down, bring the SL here. Finally your SL got hit. Here you got 1:2 ratio, though your trailing SL hit. Hope you understand what is trailing stop loss. Now identify what is this candlestick formation. I'm going very slow as lot of new learners are in this channel. So this is bearish engulfing formed at the resistance. Bearish engulfing formed at the resistance means market will fall down. Market will fall down till when? Market will fall down till it get the support. Now let us see the entry. Aggressive entry. We have 1:1.8 kind of a risk to reward. Again, how to trade here? You have taken an entry. When price moved up, put your SL here, bring your SL to here. This is called trailing SL. When market moved further, bring your SL here and your SL got it. You got 1:0.5 kind of a risk to reward. Hope you understand. We'll move little bit. The other candlestick formation. See this. Can you identify what is this candlestick formation? This is called piercing pattern. Piercing pattern is a bullish kind of an formation. So in the piercing pattern, aggressive traders will take on the top of the green candle, and conservative investors, when this high breaks on the second candle, first candle, that red candle, then we can get an entry. So now when you taken this entry, see the risk to reward, and you can trail SL up to here. Can you see this? This is 1:15 kind of a risk to reward. So what is the best way? When you see the piercing pattern, enter here. When you get 1:2, exit your 25% quantity. Say if you have 100 quantity, exit 20. Let us go further. When it gone to the 1:4, then exit another 25% of quantity and bring your SL to when the price retraced. These are all retracement points. When you see, like when you get 1:10 somewhere here, exit another 25% and let us remaining thing, keep it as long as market goes up till you reach the resistance, or as long as your market goes. And finally, if you trail your SL might have hit somewhere here, and you might almost got 1:14 kind of a thing on 25% quantity. In an average, you might have pocketed around 1:8 kind of a thing. Hope you understand what is 1:8. If you put 2000 loss, then 8 is the profit percent. 8 is the profit base, so 16,000 could be your profit. So we'll go a little fast now, as we are taking a lot of time. Can you identify what is this? Bullish Harami pattern. When bullish Harami pattern forms at the support, market move up. And see that we have here bearish engulfing. So we are getting back to back trades. When you have put in your capital here, and when you ride here, you got almost 1:5. You exited and immediately you got on next couple of days an entry, and you got again 1:6 or 7. See here another bullish engulfing. Moved up, and at the resistance level, when aggressive investors can take, there is no candlestick formation, but at the resistance, when first candle forms and when market breaks the first candle, you can take entry, but I suggest only if you have 2 years experience, and then you can do this, otherwise no. This is the Maraboju candle at resistance. When you take an entry, market will fall down. This is tweezer bottom, tweezer top kind of a thing, but we'll see only one candle. This is a doji candle. When doji candle top breaks, we can get enter, and at the support especially, we have lot of risk to reward in this. Bearish engulfing at resistance. This is dark cloud cover, the opposite form of piercing pattern, the dark cloud cover. Dark cloud cover, when first candle is green followed by a red candle. Red candle should occupy at least more than 50% of the green candle, then the formation is called dark cloud cover. So the red candle broken more than 50% of the green candle, so we can have an entry here. This is aggressive entry here. Conservative entry should be here. So when entry, and then see the market come down till this point. Support. In the support again you can see bullish engulfing. Market moved up. Hope you understand how this works on daily chart. So let us jump into the, almost we covered till today. See, there is a hammer kind of a candle, reverse hammer kind of a candle at the resistance, market fallen. There is a Morbozo candle, market fallen. You know that where we need to exit. When you are entering at the resistance point, there is a support to exit. Now there are candles are forming and consolidation is happening. Consolidation means a group of candles are together, not moving market anywhere. See here, all these candles are grouping. So this is called consolidation. When we need to enter, when we see the consolidation, when a candle breaks above to the box, this is the area where we need to get entry, and we can write till when we get next resistance. Resistance not yet formed, so market has still chance of moving up. So we'll learn support and resistance levels and trend lines and all. So when we do that, we'll understand when to exit. When you draw a trend line meeting at least 2 points, and when price breaks the trend line and closes below, this is the point you need to exit. And if market reverse back and move up, then you can re-enter again to trade further. Now let us see Bank Nifty in hourly chart. Nifty and Bank Nifty both are indexes. So for indexes, either you need to trade in futures or in options. We learn futures and options, all these things in our upcoming videos, but to understand how we need to trade, enter, exit, for that purpose we are analyzing these charts, especially on candlestick formation. You can almost consider this as a harami candle. It's look like a bearish, but it's an harami candle formed at the support. An aggressive investor can enter on the top of it. Conservative investor, trader can enter on the top of it. What happened here? Price broken on the resistance. What will this called now onwards? It's a support. What happened? Price moved up, taken a support at this support area, moved further up. Bullish engulfing at the support, market moved up. Here bearish engulfing, market came down. Identify this. Bullish harami, taken a trade here, market moved up. You understand the trading SL, trailing SL. Bring the SL here, bring the SL here, let it hit. Bring SL here and it will hit here, our SL somewhere here. There is a big hammer candle here at the resistance, almost resistance. You can take risk if you see this big wick, even though there is bit up on the resistance. If hammer candle forms, entry and write the trade till here. Then market moved up, bring your SL from this point to this point. When market moved further up, bring here. If SL hits, then no profit, no gain. And market moved up, you bring your SL here. By then you might have closed your position 20%, 25% somewhere here, 50% somewhere here, till your SL got hit. Finally you need to move your SL somewhere here, and this red big candle hit your SL. Hope you understand. See, on support area, almost a big Morboju green candle. Take an entry here, write this trade. It's look bit simple on paper, but when you trade, lot of emotions comes into the picture, and there is a lot of challenge. So after learning, after chart trading, you need to read hundreds of charts, dig the stocks, unknown stocks, known stocks. Better work on only Nifty 50 stocks first. Nifty consists of 50 stocks, so trade only that 50 stocks where you don't find big volatility in that stocks, and check that 50 stocks with candlestick formation and understand how things will be working. Bearish engulfing at resistance, 1:5 done. Bullish engulfing, conservative entry, you got 1:5 or more. Hope you remember, in other chart we seen the consolidation part. And if doji forms at the resistance, we need to enter at the lower part, not at the top where we have a resistance and our SL will hit soon. So here we don't have an entry. You can find a hammer here, but it's in the consolidation box. So what you need to do, when there is a consolidation, candlesticks forms in the box together, when one candle comes out of it and breaks that, you can enter somewhere here and you can write there this big. What happens, probably you might have entered here, but this SL got hit, and again this box, when price comes out, enter here and you got great risk to reward, almost 1:10 kind of a risk to reward, where you lost 2 things here, 2 points here. A conservative investor need not enter this kind of things. You need to enter when price sticks to the resistance to sell trades, and buy trades when price sticks to the support area. Have you observed? This is a big hammer candle, or you can call it as a doji. When doji forms, we need to enter on the top of it. And when you enter, you can write that, and your SL is somewhere here, price never came here. Let us now see on a stock, Reliance, and we'll put 15 minutes time frame. This is especially for intraday. People will use 15 minutes time frame, and when you enter in this, you should not exit on next day or holding for a week. When you get entry in this on the same day, you need to exit before 3 o'clock. If you are an experienced person, you can hold for a longer time. Let us see now. 15 minutes chart, Reliance. This is the entry, bearish engulfing at resistance. When you get at support, you need to exit. So you got 1:1.75. That means if you put for 2000, then you almost got 3750 in this trade. How much time it has taken? You are entered here 1, 2, 3, 4 candles, 5 candles maximum. 5 candles means 1.5 hours. See this, in 15 minutes candlestick formation, we find bullish engulfing. Bullish engulfing, aggressive investor entry, and conservative investor entry in the middle of it. So market you drag till 3 o'clock, but market ended somewhere here, so you need to close it here. So you got 1:2 kind of a thing, where when you put 2000, you got 4000. Hope you understanding, and my efforts are working out. If you are little bit aggressive and trade is going in your way, you can hold for next day as well, but my sincere suggestion, intraday exit entry on the same day. When you see bullish engulfing at the support, let us see now how much percentage we got in this long position. This is the entry, and here is our stop loss. When we enter, and we can trade till up to next resistance. Resistance is somewhere here. You got 1:6 kind of a risk to reward here. Even in intraday, 1:1 exit 25%, 1:2 exit 50%, and trail your SL till you get SL hit. So here if you put 2000 rupees, you might got 12,000 rupees in this trade. I'm not tempting you, but after learning, do paperwork for 1 year. After 1 year, buy only 5 quantity or 10 quantity and test yourself for another year, and then start finally doing your trade. Hammer candle at the resistance. You got 1:1 kind of a profit in this. This day begins and have some multiple candles on the same area. What to do? When a candle breaks out and breaks out of the box and closes above, then your entry is somewhere here. When you enter here, your SL is here, and you can trail till the next resistance, or else today's resistance. You got here almost 1:4 risk to reward. That means 2000, you made 8000. When you see a market in this kind of a consolidation, candles are all together, then ignore this stock on the particular day. This is called consolidation. You need to enter when price come out of this box, which is called breakout or breakdown. So for that you need a lot of experience, and without experience, what will happen? You enter somewhere here, price will come and it will come back, it will be in that, and you can't test your patience such a long time. Check this, bullish engulfing. Price has gone up and you got 1:3. have you identified here? This is the bullish harami. This is called pregnant lady kind of a candle. You got 1:5 kind of a risk to reward when you exited the resistance. If you trail, still you will be getting a lot of money. See, sometimes what happens when you see price might have reached here, so you thought, array, I missed out this trade. But lot of times what will happen, price will come back and test that entry level whatever we taken. Big players, they can't buy the huge quantity at one go. They want to buy again and again. If you see the prices coming back to the area again and again till they get good quantity whatever they are required and prices move up. Once they have, they will be exiting. When they exit, prices will fall down. See this big harami candle. This harami candle formed because of the big players. You can still have an entry for 1:1. So now we'll close it here. What you do, open this TradingView account with Google account. It's a free of cost. You can open. You can Google it how to do. You have some videos in YouTube, not mine, but somebody others, on how to open a TradingView, and you can plot these two indicators, all patterns, all candlestick patterns. This will come, and support and resistance levels. These lines will come. So see all bullish formation candidates at the support, identify, and identify all bearish kind of a candles at the resistance. Example, bullish engulfing, bullish harami, piercing pattern. These will form at the resistance, support. At the resistance we'll see dark cloud cover, bearish harami, bearish engulfing, which is called dark cloud cover. All these will form at the resistance. Identify them, and you can put a comment in the comment section that how many candlestick pattern that you identified at the resistance and how many candlestick patterns that you identified at the support. So go through this video many times. If you identify candlestick patterns by naked eye, I can tell you that in next 2 years you can mint money. But for that, before, you need to practice a lot. In a naked eye, you need to identify which one is the harami candle, or which one is the reverse hammer candle, which is the bullish engulfing, which is the bearish engulfing, this is the dark cloud cover. You need to identify in such a way. Now you have hands-on experience in between support and resistance. Also you can take an entry. See here a doji candle formation. Doji candle means market is going up. If doji forms, then everyone feels that market will fall from here, because buyers doesn't have much hands-on to buy more. That's the reason doji candle will form. Sometimes what will happen, they'll pump the money from on top of the doji candle and market will go up. These things will come with the experience. Such a big Marubozu candle, novice investors think that candle itself becomes such big, so there is no point of buying. But when you see a big buying candle, this is called buying candle, market will go up. This is called selling candle, market will fall down. So we have taken a lot of time now, so do the homework and put a comment saying that you've done your homework and identify